Welcome. This video, I'm breaking down a more advanced strategy that combines three major factors to really bring in some pretty incredible results. So this strategy is going to combine three really important factors. One, higher time frame trend direction. Two, divergence. Three, market structure. Divergence will be lower time frame. Market structure break, lower time frame, higher time frame trend direction. When these three things are combined, like I'm about to show, you'll see the potential for this type of strategy. With just a little bit of practice, you can definitely pull out quite a lot from the market. So I'm going to go through 20 individual setups all in a row so you can see the potential for yourself and decide if it's really has potential in your eyes as well. So before getting into things, I do want to make a little announcement about my new affiliate because recently Bybit Exchange has requested its users to do KYC. So a lot of users, especially in the States or other jurisdictions where either they don't want to do KYC or they can't do KYC with Bybit, now I have partnered with BitGet because they do not require KYC. So for those people leaving Bybit, check out my affiliate link in the description. I'll pin a comment with it as well. If you're interested in an exchange that does not require KYC, I do have that link in my affiliate, and my referral code will be in the description and in a pinned comment of this video. So they do have a very reliable exchange, no KYC, of course, most importantly, very competitive trading fees, and a lot of products to offer on their exchange. So all of the different things like copy trading and having high liquidity, low trading fees, and a community. So really they offer everything there that you need. And so that's why I partnered with BitGet. They have proof of reserves on for their exchange. So always keeping at least 1-to-1 with customer assets, which is a big deal in my opinion. So safety, they have it. They've proven it, and that's why I'm partnered with BitGet. So check it out, link in the description if you need a crypto exchange now that Bybit has required KYC. But anyway, let's talk about this strategy and break it down. This is on Bitcoin, 5-minute time frame, and the indicators being used here. Number one is the higher time frame trend direction, and this will be determined by 1 hour 200 period exponential moving average. Okay, so that's what we have here. And next we have the RSI with standard settings, 14. And this one will be used for the regular divergence on the 5-minute time frame. Then I'm using the Trade Pro market structure indicator, which will just be marking up the intermediate term market structure for me to use as the market structure breakpoint to confirm my setup. So you don't need an indicator to identify market structure, but this will make it 100% objective. And this indicator, the market structure indicator that I have, is available on my Patreon. It does have a fee associated with it. So you can just use your naked eye if you don't want to pay for the indicator, or you can find a free one online as well. But those are the indicators. Those are the things you'll need. Let's break down each of these setups, starting with the very first one here. So the rules of this strategy are as follows. We want to trade with the high time frame trend, so the hourly trend, meaning if price is under the 200 period exponential moving average of the hourly time frame, we only want to be shorting. We only want to be looking first for regular bearish divergence, and the RSI needs to have come up into the overbought territory. Okay. So regular bearish divergence means there's a lower high on the RSI, but at the same time we get a higher high on the price action. I'll be using the candle bodies, the close, because that's where the RSI is calculated based on. Okay. So for spotting my regular divergence, using the candle closes. Okay, not the wicks. So we see this pushes up, goes over bought right here. Price is under the 200 EMA of the hourly time frame. We see a divergence. Okay, so that's the first step. We just wait until we spot some sort of divergence, and then we're looking for an intermediate term market structure break to the bearish side. Okay, bearish intermediate term structure resting right here with the yellow and the green arrow here. That is broken to the downside on this red candle. Okay. At this point, it's time to look for a retracement to get short. Okay. That happens here on this retracement. So this is the retracement to short. And the idea is to look for that next move down to continue this downward movement. So we're looking at this move down, pullback, shorting this pullback after the market structure break, bearishly, looking for that next move down. Okay, so that is the setup. We have the higher time frame trend in mind. We have the regular bearish divergence, overbought RSI here, and then the market structure break, bearish market structure break of the intermediate term, not the short term market structure break, but intermediate term. So let's move on to the next setup. This one here, bearish divergence, comes overbought RSI, higher highs on price, lower highs RSI, under 200 EMA of the hourly time frame. So we have high time frame trend direction in mind. Looking for a structure break now, intermediate term structure break. We don't have it here. This is our first intermediate term structure break. Okay. So you can see this candle wicks down, takes it. So then we can short at that point. We get a pullback, small one, and then follow through to the downside. The idea is to get in on the first pullback or first consolidation after a market structure break and look for a continuation move. We're just trying to pull some out of the market here. We're not trying to capture this entire thing, but trying to pull some out of it. Okay. Let's move on to our next setup. We don't get any up here. Here's our next setup. Regular bearish divergence under 200 EMA of the hourly time frame. We're waiting for intermediate term market structure break bearishly. We get that right here. We get a pullback. So once this breaks bearishly on the structure, we're looking for any pullback, first consolidation to get short. And then we get this. Okay, so this one plays out. That's the setup. So that's the first three in a row. We'll move on, try and find the next one here. Here's the next one. So we have our next regular bearish divergence under the 200 EMA of the hourly time frame. We're waiting for a market structure break of the intermediate term. We get it right here. Then we consolidate, which is the opportunity to get in and look for that next move down. We get that next move down. Okay, so that one's concluded. Let's move on to our next setup. Next setup here with bearish divergence, regular under 200 EMA. So we're waiting for a bearish market structure break of the intermediate term structure. Breaks right here, wicks up, and then we get a push down. Price continues down for quite some time. Big moves down. Do you think you're capable of making some profit out of this type of setup? Need to practice a bit, check out these setups and kind of see how they form. Maybe you can't get a position on all of them, but let's take a look at a bunch more. Here's the next one. We got the regular bearish divergence. Goes over bought under 200 EMA on the hourly still. We're looking for that structure break. Happens right here. Pushes down, pulls back, pushes down. The top's already in. Get a big move down. Okay, let's move on to the next one. No regular divergence. Just looking for regular divergence. Here we get one. Now this one, looking for that break. Breaks right here. pulls back after the market structure break a couple times here, and we get a big follow through to the downside. Okay, that's the setup, shorting up here. Next one right here, we get the regular bearish divergence. Price is under 200 EMA of the hourly time frame. Pushes down, breaks intermediate term structure bearishly. So we're looking for the pullback for the lower high and another move to the downside. We get our pullback and we get our move to the downside for the follow through move. That's all we're looking for here. Now here's the next one where we do get a bearish divergence and we do see a bearish structure break right here, but we don't get a full follow through this time. So this would not be a successful setup. This one would be a failure. Takes out the high here before we get any meaningful follow through to the downside after a pullback. So this one is a fail. First one to fail here. Let's move on and find our next setup. So now price has come over the hourly 200 EMA. We're going to be looking for regular bullish divergence. So we get that here. Higher low, lower low on close. So we're looking for a bullish market structure break of the intermediate term here. We get that break right here. Now we're looking for any pullback consolidation. Maybe you don't get an entry here because it doesn't pull back very far, but nonetheless, pulls back and we get the follow through. Do you think you could possibly pull something out of this? Most likely, if you get an entry. Let's look to the next setup. Next one here. Also consider this one to be a failure. So we get the regular bullish divergence, breaks in structure right here, and then pulls back, but we don't get a full follow through to take out this high before things come down quite far. So I consider this one a failure. Let's look at our next one. Regular bullish divergence coming down here, pushes up, breaks structure right here. This candle pulls back nicely and gives us a beautiful follow through in just 10 minutes. Nice push up there. That's what we want to see. We're just looking for this follow through move. Stop loss would be to break even above the highs. Profits partially taken, looking for runners. You can do what you want with the trade management aspect of things. Let's move on. Next setup. So this one, again, same thing, bullish divergence. Looking for that market structure break, which happens right here. We get a small pullback here. We do get follow throughs. We get a bigger pullback here and then a larger follow through. So depending on how you want to trade it, if you're looking for a certain depth of pullback or what you decide, that's going to determine where your entry is or what type of move you're looking for. But you could get a smaller trade up here, lock it in, or look for that larger retracement, still looking for a higher low compared to the bottom here. We get it, and we get the big follow through to the upside. Okay. Next one. Regular bullish divergence. Price over 200 EMA hourly time frame still. We get our bullish market structure break of the intermediate term right here, this candle. We get our pullback, and we get our follow through. Nice big follow through here. Next setup. Bullish divergence. Break in market structure right here on this candle wick. Nice pullback and follow through to the upside a couple times here. So we get follow through here as well. This definitely pulls back deep enough to give an entry on this first pullback. Let's move on to our next setup. Here's this one, which doesn't consolidate after market structure break. Nonetheless, follows through to the upside. So we got our regular bullish divergence here, breaks structure right here, and just takes off to the upside. Unlikely to have an entry on that one. Here's another setup. This one does give a nice pullback after the break. So we get bullish divergence over 200 EMA of the hourly time frame, higher time frame trend, break in structure, bullishly, intermediate term, pullback, follow through, and we get a whole lot of follow through here. There's another one. Price comes under 200 EMA. We're looking for bearish divergence now and overbought RSI. 5-minute time frame. We get that right here. We get a break in structure here. Pullback, follow through for the downside move. And that's all we're looking for. We're looking for that pullback with full follow through to take out the lows here. And that's what we get. Next one. This one potentially could be a failure. So we get the regular bearish divergence, market structure break right here, little pullback, and a follow through move to the downside. So at least stop loss to the break even. Let's move on. This one, 2 possible scenarios of entry, both successful. So we get our market structure break right here. After getting our bullish regular divergence, oversold, over 200 EMA, pulls back, follows through, gives another pullback, follows through once again. And here we are. I believe this is our final example. Bullish, regular divergence here. We're waiting for a structure break. We get it right here. Pulls back right after that, and then follows through to the upside with a big move. I believe that is our last example. Yep. All right. So that is the strategy. That's the setup. If you take a look and look through a bunch of setups like this and practice a bit, you can definitely really take a lot out of the market with a strategy like this. And it doesn't take that much practice. It's not that difficult. There's not that many parts to it. Just some market structure, higher time frame trend, and some divergence. So it's not that difficult. I just need to do some back testing, practicing with it on a demo, and you'll be able to see the potential that it can bring. So that will conclude things for this strategy. And again, don't forget to check out BitGet with my affiliate link in the description or in the pinned comment down below. If you have been using Bybit and you can no longer use them because of KYC, then check out that BitGet affiliate. Or if you are just looking for a cryptocurrency exchange that you can use without KYC, and you haven't already found one that you like, then check out that link. Thank you guys, and have a great day.